Hi guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we're looking at. And first off, here's wishing all of you a very, very happy new year. So on behalf of the entire team and here at CNBC TV 18, we would like to wish you all of the health, happiness and prosperity as we get into a brand new year. That said, let's take a look at the very, very limited cues that we're getting across global markets. There's really not much happening because most markets are shut today. And we'll also probably see that tomorrow. So the only market which is trading from the Asian pack is the Korean Kospi Index. Absolutely flat right now, just around 30 odd points in the green. So there's not much going on there as well. The SGX Nifty will be up for you and it is indicating a lower start for our own markets as we get into 2023. So 41 points lower is what we have on the SGX Nifty. Let's talk about the US then. Wall Street ended the last trading session of 2022 lower, which is wrapping up its worst year since 2008. So the Dow Jones was 74 points in the red. This is Friday's action. S&P 500 slipped around 10 points and the Nasdaq Composite saw similar losses of around 11 points. All three major averages, of course, suffered and, all through the year, and they have snapped a 3-year winning streak. So the Dow fell the least. It was down around 9%. The S&P 500 sank nearly 20% for the year, and the tech-heavy Nasdaq is where we saw a bunch of the pain come through. It tumbled 33% in trade for all of 2022. CNBC's Seema Modi gets us a wrap of all of that action from Wall Street.
Today's closing bell on Wall Street ends the worst year for stocks since the 2008 financial crisis. The Federal Reserve's moves to contain inflation by slowing the economy get a lot of the blame, and those interest rate hikes are expected to continue into the new year despite fears that they will cause a recession. The Dow falling just 0.2% today, but it is down almost 9% this year. The S&P 500 dropping 0.25% today and losing almost 20% for the year. The tech-heavy Nasdaq down 0.1% and plunging 33.5% in 2023. Now, when stocks fall, Wall Street does feel the pain. The CEO of Goldman Sachs says mass layoffs are coming, with 4,000 employees set to lose their jobs in the first 2 weeks of January. That's 8% of its workforce. And regulators in the Bahamas say that on the day after FTX filed for bankruptcy, they took control of $3.5 billion worth of the exchange's cryptocurrency for what they call safekeeping. That's the action from the U.S. market. Back to you in Mumbai.
Seema, thanks a lot for getting us all of that action from Wall Street. But moving on, some economic buzzwords that kept global investors on the hook in 2022 were inflation, rate hikes, hard landing, soft landing, and lots more. So it was truly the Fed which took center stage this year. CNBC TV 18's Steve Leisman filed this report on what we can expect from central bank this year.
The one thing you can be sure about is the Fed will be hiking and holding for some period of time next year while cutting its balance sheet deeply. But with the question of how much rates rise and how long they stay there a matter of strong debate, the only certainty is the Fed's going to be a source of ongoing volatility in the stock and bond markets. The futures market has the Fed priced to hit its peak rate in June at just under 5%, but then gradually easing back over the year towards 4.60. In both February and March, there's upwards of a 60% probability of 25 basis point hikes. That'll bring the funds rate to 4.88. But disagreements over the outlook start in earnest in May. The market trades with about a 7% chance of a 25 basis point cut in May, a 40% chance of no change at 4.88, and a 41% chance of a 25 basis point hike, and a 10% chance of a 50 basis point hike. That pricing reflects a broad set of views among forecasters for 2023 and debates over growth and bringing down inflation. Goldman Sachs writes, "We're skeptical the FOMC will cut the funds rate until the economy is threatening to enter recession, and we do not expect this to happen next year." But MUFG says by mid to late summer, fear of an economic downturn triggers a shift in monetary policy. Our view goes from hawkish to dovish pretty quickly. What's less an issue of debate is the Fed's plans to reduce its balance sheet. It reduced assets by $400 billion this year, and it'll bring it down by $1.1 trillion next year to around $7.4 trillion. That process will have more of an impact as the year goes by, so it may be a reason for the Fed to go slower and stop hiking sooner to give the balance sheet effect a chance to take hold.
All right, Steve, thanks a lot for that. So the Fed really took center stage in 2022, and that is everything that we can expect getting into the new year. But with that, let's also bring you some important opinion on how the markets could move and how the Federal Reserve could act in 2023. Listen into that.
I've never seen so much bearishness. There's never been a time when 60% of economists forecast a recession. And when everyone's on one side, I get very wary. I think there might be some really surprises. I think we might see actually the job market loosen up dramatically, even job losses, but that GDP grows much faster than most people think. And we have a chance, if the Fed pivots, to really avoid a recession and have a good year for profits.
At this point, really, reducing the balance sheet is more of a technical issue. I think that it has some impact, but maybe it's overemphasized. The real story is about rates, and that's, I think, the important thing that the Fed has to focus on. And and I actually think that the markets are sort of putting pressure on the Fed to not raise rates as fast. I think that's a mistake. I think the Fed really needs to do its business. Much better for it to do it quickly and earlier, and then actually not have to raise rates as high as it otherwise would. So this is actually something that's very important.
All right, that is some important opinion that we're bringing you, but let's also get you the final update in our global market wrap this morning. European markets ended the last trading session of 2022 sharply lower. So the French CAC was down over 1.5%, the German DAX index was down around 1% at the close, and the British FTSE saw a cut of 60 points at the end of the trading session. In fact, European stocks wrapped up the worst year since 2018 as Russia's invasion of Ukraine, higher inflation, as well as hawkish policy action hammered risk assets. The Pan-European Stock 600 index closed the year nearly 13% lower. The French CAC index as well as the German DAX index both logged in annual losses of around 10% and 13% respectively, and the British FTSE recorded a yearly gain of just over 1%. So this has definitely not been the year for global markets, and what we have been talking about as a theme is India's outperformance and resilience in that context. So with that, let's bring you how the trade setup as we get into 2023. How is it looking? The stocks that you should have on your radar as well. We have our research team joining in with exactly that. Rima, Surbhi, as well as Nigel join me now. Guys, a very good morning to all of you and a happy new year. And Rima, coming to you first, take us through how things are looking when we get into a new year. Of course, the start looks like it might be a little soft.
Indeed, so the Lal Street looks like it's headed for a negative start this morning. The SGX Nifty is down close to about 40-odd points, but it could be another thin, sideways kind of trading session because so many markets are shut today. So in the Asian market screen, you've got the Chinese, the Hong Kong, Singapore, Taiwanese market shut. In the European region, UK shut. And then later tonight, the United States market is also shut today. That said, the handover from the global markets on Friday was negative. US stocks closed out 2022 lower, and they've capped a year of very sharp losses. The S&P 500 was down 20% for 2022, making it the worst performance since the Lehman crisis had pushed out markets in 2028. For our own markets, though, that said, there are a lot of triggers. So one, we'll be reacting to the auto sales numbers. So Maruti and Eicher Motors was weaker than expected, but Tata Motors has clocked in healthy growth in the passenger vehicles. On the macro front, the November core sector output has seen a growth of 5.4% on a year-on-year basis and up 0.9% on a month-on-month basis. This is for the period of November, but there was also a favorable base effect. One of the big global cues to track over the next couple of days will be the FOMC minutes. This is for the December Fed policy out on Wednesday, and that's the time where Jerome Powell had indicated.
Looks like there is a little bit of a problem with Rima's audio, so I'm going to give her a second to, just fix that and figure that out. But like Rima was saying, the start looks like it might be a little bit soft for our own markets today. In terms of cues, it is the FOMC minutes that we will get today. That is something that we are watching out for, so that will be important. And so that is how it's really looking as far as the market cues get, look at this morning. But let's also talk about the individual stocks that you can have on your radar today. Surbhi is here with that entire list. Surbhi.
Hi, thanks for that. So as Rima mentioned, we will be watching out for auto companies as they've come out with their monthly sales numbers. The first one is Tata Motors, where their total sales were up 14% at 228,000 units, and domestic sales were up 10% at close to 73,000 units. Escorts Kubota, where the total tractor sales were up 19%. VST Tillers, where the total power tiller and tractor sales came in at 4,560 units versus 3,640 units same time last year. Maruti, where the total sales were down 9% at close to 140,000 units. Eicher Motors, where motorcycle sales were down 7% on a year-on-year basis at close to 64,400 units. Apart from these, few other names that will be in focus today are Religare, where the lenders approve one-time settlement for outstanding dues for Religare Finvest, Zydus, where the company receives final approval from US FDA for the triazolam tablets, and Supreme Petrochem, where the company receives consent to operate from Maharashtra Pollution Control Board for PS and EPS capacity expansion at their Raigad plant. Thank you.
All right, Surbhi, thanks a lot for getting us that entire list. Looks like there's been quite a lot of stock-specific action while we were out celebrating New Year's. But finally, let me hand it over to Nigel, who's looking at all of the cues from the futures and options space. Hi, Nigel.
Well, morning, Pavitra. You know, everyone's been talking about the big run that we have seen in the Indian markets and the outperformance. I'm just wondering if 2023 can belong to the broader market. So let's see how that pans out. Now, focusing on market action, well, the volumes were thin on Friday, and the markets, well, they saw a bit of a slam dunk, particularly in the last hour of trade. Volumes are thin. They're likely to stay thin, though, at least for the next 2 to around 3 trading sessions on. The FI data, though, looks a little bit bearish, as they've added shorts and also they've been writing calls. Now, on the short side, they added close to around 12,000 short contracts odd. The long short positioning is roughly around 50% apiece. And in terms of writing index options, well, they wrote close to around 240,000 calls. That's in the ratio of close to around 4:1. Tell you that at higher levels, we could see some bit of supply. On the option side, well, they're buying both calls as well as puts, so that's pretty much even-Stevens odd. What are the levels you're looking at then? On the Nifty, remember we went closer around the 100 DMA odd. In fact, we breached that mark, but that becomes the first reference point on the downside. However, on the upside, first we need to cross that 50 DMA. So for the time being, we're in that 2% band, that around a 400-point band odd. On the Nifty bank itself, well, again, we're in a 2% band. And that's between the 20 and the 50 DMA. Both those levels come up for you on the screen. The SGX Nifty is suggesting a bit of a dip. Maybe at some point of time that gets bought into, but I think we'll get a broader trend in the next 2 to around 3 trading sessions. On the Nifty, watch out for the 50 DMA, 18,261. That's the crucial resistance mark. Let's see whether or not we can get past that. Back to you, Pavitra.
All right, let's see whether we can get past that or not. Nige, thanks a lot for that. But let me go back to Rima now. Rima, we were talking about how right now the global cues are quite limited, but towards, the middle of the week, we are likely to see some important cues.
Yes, so the FOMC minutes for the December Fed policy will be known on Wednesday, jobs data on Friday, and next week, all the large 4 IT companies will be reporting numbers. It starts with TCS on 9th, Infi on 12th, and you also have Wipro and HCL Tech reporting numbers towards the end of the week. In terms of flows, the FIs on Friday sold 2,950 crore, while the DIs bought 2,266 crore. And one final macro cue to track today will be the rise that we've seen in crude prices, and Brent is now at $86 per barrel. Back to you.
Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. An important update, the Supreme Court is likely to pronounce its judgment on a patch of pleas challenging the demonetization of 1,000 and 500 rupee currency notes in 2016. So a 5-judge bench is likely to pronounce its verdict later today, while the court's cause list also indicates that there are likely to be 2 judgments in the matter. Remember, in the last hearing, the Apex Court had reserved its verdict and then directed the RBI and the center to put relevant data on record. So this is something important that we are tracking today. We'll of course bring you updates on that as and when we do get them. But moving on, here is the space that is really going to be in focus today, which is the auto sector on the back of sales coming through for the month of December. In a media statement, before that, we have to also update you on this. Toyota Kirloskar Motor has said that they have been notified of an incident which might have exposed personal information of some of its customers on the internet. So while the extent of the intrusion is being confirmed, the Indian Computer Emergency Response Team has been notified of the incident, and then the company has also said that it will work with its service provider to further enhance cyber guidelines and remains committed to avoiding inconvenience to customers. So that is an important update that we are tracking for you as well. As promised, we are going to talk about the auto sales, but before that, we have to head into a short break. On the other side, we'll get you all of those numbers. Welcome back. As promised, let's talk about the auto space now, because we have been getting the sales figures for the month of December. We are expecting a lot more today as well. But Sonia, so far looks quite mixed.
It is a mixed bag for the auto sector. So, the passenger vehicle makers, especially the guys who manufacture small cars, have been under pressure. So, we start off with Maruti, where the total sales for Maruti were down 9% on a year-on-year basis, lower than what the street was estimating. Now, over there, if you look at it, the domestic sales were down about 10%, the export sales were down 2%, and it's really the small car segment that has been under pressure for Maruti. Moving on, for Eicher Motors, it was a mixed bag. Royal Enfield sales have been under pressure, down about 7% year-on-year. But the commercial vehicle packet, both for Royal Enfield, for Eicher Motors as well as Tata Motors, did really well this time. So CV sales are up of almost 17.3%, coming in at 7,221 units. Let's move on to Tata Motors now. Over there as well, the total domestic sales went up by 10%, and the medium and heavy commercial vehicle, piece is looking very good. It's a 34% growth that we've seen, and the company says that there is a good recovery in passenger carriers demand, improving fleet utilization, a pickup in the road construction projects, and an increase in cement consumption that has led to this kind of a recovery in terms of sales. Now, Tata Motors passenger vehicles also posted the highest ever monthly and quarterly retails in the month of December, owing to the very strong showing for electric vehicles, which grew about 64.2%. So Tata Motors was a big thumbs up this time, both in commercial as well as in passenger vehicles. Let's move on to the tractor sales now. Very good numbers coming in from Escorts Kubota in the month of December. Total sales growth of 18.7% at 5,573 units, and the domestic tractor segment grew 22%. Now, the management says that the rural sentiment continues to remain favorable on account of a good Kharif procurement, Rabi sowing, and better water levels in reservoirs. So, all in all, good set of numbers apart from the passenger vehicle segment, especially the small car segment. Back to you.
All right, Sonia, thanks a lot for rounding up all of the auto sales figures so far. But moving on now, there was also a slew of macro data announcements that came through on Friday. So core sector growth for the month of November came in at 5.4%. Fiscal deficit ballooned to nearly 60% of the full year. Lata is here with all of the numbers and how it's looking right now. Lata.
Actually, the overall core sector at 5.4% doesn't look very ugly. But it's almost entirely because the November ago was terrible. And therefore, it's a base effect. If you looked at the internals, 6 of the 8 sectors have actually contracted versus October. Now, there's no reason for November to be a seasonally weak month at all. After all, the Diwali holidays were in October. So, you have only 2 sectors doing well. Let me give the good news first. Coal is up 12.3% year on year. And cement is up a whopping 28%, 28.5% actually year on year. Both have done exceptionally well. That's the good news. Steel, electricity are up YOY, but that's again because November ago was a terrible number. That's why steel and electricity look good. But if you compare them to October, both are showing contraction, as are, refinery, gas, the other sectors as well. So core sector, I would worry a little till things turn the corner. When it comes to fiscal data, there's only one number which is a little worrying. Corporate taxes, the amount paid in November was less than what was paid in November ago, which is a bit startling. And therefore, the overall gross tax revenues were a little lower than what we had collected same time last year. But that's a minor worry. It can always be made up when the advance taxes for December were paid and when that data comes. We have to look at fiscal deficit as the key takeaway. That is up 60% of the full year has been spent. Last year, same time, as of April, November, only 46% had been spent. Now, I would treat that as good news because it actually spurs the economy. And especially if you look at the capex spending, that's a whopping 60% of the full year, much better than year-ago levels.
All right, Lata, thanks a lot for getting us all of that important data. That is the macro picture right now and all of the data that came through on Friday as well. But as promised, let's also talk about the commodity space now. Manisha joins us. Manisha, good morning. We were just talking about how, this has really not been, the past year has not been the year for equity markets, but commodities are a whole other picture.
Oh, well, yes, absolutely, Pavitra. One of the best performing asset classes in 2022 clearly has been commodities. And I'll start with the crude oil prices, which ended the year with small gains, but a second yearly gain. And we have seen the Brent and WTI gain between 8 to 12%. And we have entered 2023 with so many uncertainties about Russia, European Union price gaps and price caps, and the OPEC meeting still awaited into the market. So yes, a lot of uncertainty and volatility is what we've started this year as well. I also want to talk about metals because while the last year saw some declines, especially in case of copper and aluminum, but when you look at the warehouses on LME, the aluminum stocks have declined by 72%. Zinc inventories have declined by 90% in the previous year. So these are few metals which have started slightly on a positive note in 2023. Clearly, this week is also going to be quite choppy, lower volume. The participation is just about coming back. Today seems to be a really slow day. But whatever we have started with Asian markets right now, there is buying back in commodities.
All right, so commodities really shining in the year gone by. Let's see how the coming year looks for commodities as well. But with that, we have to move on and bring you some somber news that came through this morning. Tata Group veteran R. Krishnamurthy passed away on Sunday. He was 84 years old. He was a director at Tata Sons and was also the vice chairman of India Hotels, the company, for several years. So that is some important and very unfortunate news coming in. But with that, we are going to wind down on this edition of Power Breakfast with the news that the SGX Nifty is indicating a bit of a soft start as we get into the new year. Around 50 points lower is what we have on the SGX Nifty. Thanks a lot for tuning into Power Breakfast. Bazaar Morning Call comes up in 2.